Granoff Chapter 7, Accounting for Capital Assets. Why and how governments account for capital assets in both fund and government-wide statements. General capital assets, associated with the government as a whole rather than with any specific fund. Non-financial in character, distinguished from other capital assets that are specifically associated with activities reported in proprietary and fiduciary funds. Examples: the City of Austin defines capital assets as those assets with an initial individual cost of $1,000 or more and an estimated useful life of greater than 1 year. The City of Houston defines capital assets as assets with an initial cost of more than $5,000 and an estimated useful life in excess of 4 years. So you can see the state or local government entity can set the threshold, the determination of what is recorded as capital assets. This all revolves around the concept of materiality. Common classifications: land, buildings, equipment, improvements to land, construction in progress, works of art, historical treasures, infrastructure, intangible assets. Acquisition and common financing sources: acquisition, purchase, construction, contributed, donated, annexed, capital leases, foreclosure, eminent domain, escheat. Financed, tax-supported bonds, grants from other governmental units, transfers from other funds, special assessment bonds or taxes, capital leases. So a summary of how these general capital assets are acquired and how they are financed. Accounting for the general capital assets. Government-wide statements, capitalized in the governmental activities column, depreciated. We're working with full accrual accounting, all economic resources. Fund statements, the full cost debited to expenditures in the appropriate governmental fund when the assets are acquired. Fund statements, we're dealing with modified accrual, current financial resources. Here's an example. The city purchased office equipment for the mayor's office and paid $50,000 cash from the general fund. In the general fund, the debit is to expenditures, capital outlay for the full amount. Government-wide, this is all economic resources, so we're debiting equipment. Now we know that this is not a journal entry made on the books. This is just the information we need to convert at the end of the year from modified accrual current economic resources to government-wide full accrual all economic resources. Assigning a cost or placing a value. For purchased assets, capitalized cost should include the purchase price, transportation, installation. For land, legal fees, title fees, appraisal cost, closing cost, cost of demolishing existing structures that cannot be used. All other necessary and reasonable costs incurred to put an asset into use. For constructed assets, direct labor and material, overhead, architect fees, insurance premiums. Capitalized interest on constructed assets per GASB Statement 34. Here's some examples. This shows the depreciation charged to functions or programs of the primary government, and this is part of governmental activities. The government-wide financial statements, governmental activities, reflect full accrual accounting, which includes depreciation expense and all economic resources. Here's an example of a reconciliation of government-wide and fund financial statements. This is from the City of Los Angeles, notes to the financial statements. Notice it says the governmental funds statement of revenues, expenditures, and changes in fund balances includes a reconciliation between the net change in fund balance, total governmental funds, and change in net assets of governmental activities as reported in the government-wide statement of activities. So one of the elements of the reconciliation includes capital outlays as expenditures in the governmental fund. In the statement of activities, the cost of those assets is allocated over the estimated useful lives and reported as depreciation expense. So here's a reconciliation. We can continue with this on the current slide. Governmental funds report capital outlays as expenditures. However, in the statement of activities, government-wide, the cost of these assets is allocated over their estimated useful lives and reported as depreciation expense. The difference, we saw it on the previous slide, the difference is the amount by which capital outlays exceeded depreciation in the current period. And you can see this is a reconciliation from modified accrual to the full accrual statement of activities.